What's going on, world? Welcome to another episode of my channel. I'm Kevin Jenkins, and today I'm going to talk about the importance of life insurance. This episode is so special to me because I actually went and passed the state exam with life and health insurance and variable annuities, and it really opened my eyes to exactly what life insurance is and how it can be used as an investment. So if you all have any questions regarding your health insurance needs, please reach out and I will be happy to help. So what is life insurance? Essentially, it's a contract that you have with the insurance company. In exchange, you're paying premium payments monthly. And what the insurance company is going to provide you is a lump sum payment. And that's also called the death benefit. And the death benefit is usually given to the beneficiaries that are listed on the policy after you die. So life insurance is essentially a transfer of risk. That's all insurance is. The risk is the expenses that your family is going to have to take on after you pass away. So such as the mortgage, utilities, your burial, college tuition for your kids. So having insurance in place simply transfers the risk with the insurance company to cover those expenses when you pass away. They're going to provide you a face amount, and that face amount value you can be able to use to be able to cover those bills. And it's so important. I tell everyone that life insurance, it needs to be the foundation of your financial plan because, you know, if something happens to you and someone is depending on you, they're depending on your salary, and you pass away and they have no way to be able to take care of themselves. I mean, it's one thing that you don't want to happen. It's conversations that you don't want to have with the family when they're trying to figure out how they're going to cover your burial costs. So it's vitally important. Now, when you also look at your car insurance, it's also a transfer of risk. You know, you pay monthly payments every month, and if you were to get in an accident, God forbid, you simply pay your deductible, and then your insurance company, they're going to pay the rest of whatever the damages are with your car. So you're simply transferring the risk, and the insurance company, they're covering the rest if something were to happen. So, you know, that's what a transfer of risk is, and that's what all insurance is when you think about it. Now, I know when it comes to this conversation, no one likes to talk about death. You know, no one likes to have these conversations because it's a tough conversation, you know, but I definitely think that you have to effectively prepare. And the one thing you don't want to happen is, you know, you pass away and financial turbulence is just happening, you know, with your family. So prepare for it and don't play with your life. I tell everyone, you know, this is a necessity and you need to take it seriously. And I know two things are for certain in life. It's death and it's taxes. It's going to happen to all of us, and you know, it's just the reality. So let's prepare and let's look at ways of how we can strategically make sure that our families are taken care of. So it is also can be the biggest blessing for your family as well. So also, when you think about it, you probably have insurance on everything else. I mean, look at your car, look at your phone, look at your mortgage, even look at your laptop. I mean, we have insurance on everything. So why not make your life a priority? That should come before all of that because your life is more important, and you need to make sure that you have the effective financial things in place to make sure that you're covered. So now, according to the AIG Life Insurance IQ study, they stated that 70% of Americans said that life insurance would protect their ability to live a long, financially secure life. Yet only half of the respondents, which were 51%, said that they either didn't have life insurance or they were unsure if they did. So almost half of Americans, according to the study, don't have life insurance. And it's very shocking to me when you look at that statistic. Also, some reasons why people don't have life insurance is they may feel that the costs are too high. You know, also some people feel that they don't have a need for it. But I feel if you're 18 and up, it's a requirement. You should have it because you need to be prepared. Anything can happen in life, and never say there isn't a need for it. You know, if someone is depending on you, they're depending on your salary, or even if you're single, you know, you don't want to have the hassle. You don't want your family, your parents to have the hassle of figuring out, covering your expenses that you had prior to you, dying, or even, with the burial costs, like I mentioned. So, it's always important in my eyes. And also when it comes to the cost of a term life policy is actually 1/20 of the amount of what a whole life policy is. Now, a whole life policy, it tends to be a little bit more because you have cash value that's added into the policy, so you're going to have a higher premium. And when it comes to the cost, these are usually determined by rate classes or risk-related categories. So your rate classes are determined among a lot of different factors. It could be, your family's medical history. It could be your health. It could be your lifestyle, such as your occupation. And some other misconceptions of life insurance is it's not thought of to address illness concerns, which when I found that online, I thought that was shocking to me. But a lot of people feel that it doesn't cover, illness concerns. Now, this was versed 34% of the people in the study saying that they will run out of money, as they age, and then 25% stated unexpectedly dying young. So when it comes to the illness concerns, there are a lot of policies within life insurance where you can be able to cover yourself in case of an illness. I mean, you have disability income, you have different riders that you can add in a policy that can cover you if something were to happen. So definitely do your research and figure out what is the best in your specific, situation. Now, also, most people, when they think about a whole life policy, when they compare whole life and term, another misconception is they automatically think that whole life policy is so much better than term because it's permanent life insurance. People feel that term life is renting and the whole life is owning. Well, what they don't tell you is that with a whole life policy, the cash value that you're accumulating over a period of time, that is kept within the insurance company. The cash value isn't given to you. It isn't given to your family. They're only going to pay the face amount. So if you had a policy for a lifetime and the face amount of it was $500,000, and let's say $100,000 accumulated over that period of time, they're not going to pay you, the additional cash value of the $100,000. They're simply going to pay you the $500,000, and that's going to be that. And a lot of times, insurance agents are paid higher commissions on a whole life policy. So that's why you tend to see some insurance agents, not all, they tend to favor wanting to sell more whole life policies because they're going to make more money, on that transaction. And it almost makes me wonder, well, is the cash value essentially given to the insurance agents or whoever, the directors or managers are in the company? So, definitely keep that in mind. And my reason why I'm explaining that is because I want you all to make sure that you get the right policy and don't overpay. I think that you can have a term life policy, you can have the right amount of coverage that you need, and you don't need cash value, because when you think about the cash value, which I'm going to explain later in this podcast, some of the things that come with pulling from your cash value is if you already have a great emergency fund, you have savings, you have investments, why do you need a whole life policy with a cash value to pull from to cover whatever specific need is in your circumstance? I think that you have to have sound financial principles, and you're going to get more of a return of investment on a term life policy rather than a whole life policy. So also, if you pull from a whole life policy when it comes to the cash value, you either, one, have to cancel it or you have to borrow against the cash value. And if you are pulling from it, the company is going to charge you interest on your money from the cash value. So essentially, you're overpaying for the policy, and who wants to be charged interest on their own money? It just doesn't make sense to me, and I really want you all to do your research so you can know the differences between the two. So if you're picking between one or the other, definitely go with term life because it's cheaper and there isn't a cash value attached to it. So what is term and whole life insurance? Essentially, term life insurance is designed to give you financial protection over a specific period of time. usually either 20 or 30 years. It can also be 10 years, whatever specific amount of period of time that you need it for. And the premium and the benefit stays level. So once the coverage ends, you're able to continue coverage for a higher premium rate. And term is great for if you want to put a policy on your kids up until the age of 18 so they can be insured. And then once they turn 18, they can get their own life insurance. And also, it can be used to replace lost potential income during your working years. So another avenue when it comes to term life insurance is decreasing term. And what decreasing term is, the benefit goes down over a period of time. The premium still stays level, and it's also designed to cover loans, such as credit life insurance. And this is designed to cover a decreasing need. So let's say you have a mortgage and you pass away, you want to make sure that your mortgage payments are taken care of. You can get a credit life insurance plan, and what credit life insurance is basically sold to creditors, which are banks, and the banks are providing this insurance on the lives of the lenders or the lives of the people that have loans with them within the bank. So it's great for if you have a mortgage, and it allows you to be prepared, with being able to cover a decrease in need. Now, also, I did want to mention that an insurance contract is essentially a contract of adhesion. And what adhesion means is non-negotiable, and the insurer sets the terms. So it's basically based on two conditions. One is that the risk of the insured may or may not happen, and two, the insurance company's obligation to pay is conditioned on the payment of the premiums from the insured. So the insured may or may not pay. You don't have an obligation to pay, but just keep in mind, if you don't pay on your policy, the insurance company, they're not going to cover you if something were to happen. And also, one thing I wanted to mention is that when it comes to you not having the obligation to pay, an insurance contract is not a personal contract, because the owner of the policy doesn't bring a risk to the insurance company. Rather, the insured, they bring a risk to the company. So keep that in mind, and it's definitely important to know that information. So when it comes to a whole life policy, it's designed to give you financial protection throughout your entire lifetime. So your policy premiums are fixed, and they also have a cash value. The functions of the savings component is essentially what the cash value is, and it may accumulate tax-free over time. Now, whole life policy is usually designed for estate planning. A lot of times you have people, they want a whole life policy because they can be able to preserve their wealth to be able to give more to the beneficiaries on a policy. But like I mentioned, the cash value is not going to be given to you, and it's more of the face amount that's going to be given to you. So I wouldn't focus on that so much. And now when it comes to determining how much life insurance you exactly need, I always say go with at least 10 times more of your income. So if you're making $60,000 annually per year, you should have a $600,000 policy. A lot of Americans, they are underinsured, and it's best to be overinsured to not have enough coverages. And a lot of people, they don't take into account, their lost salary, whatever the utilities are, food. It could just be basic things like that need to make sure you need to over-prepare than under-prepare. So I hope this was helpful for you all, this episode. Definitely look into a term life policy today. And like I said at the beginning, don't play with your life. Make it a priority. Make this a foundation within your financial plan. And life insurance is an investment for not only yourself, but for your family. And it's really a risk that you don't want to take a chance on by not having it. So I want to tell you all, thank you for tuning in. Please subscribe, like, and share this video. I would greatly appreciate it. And if you have any questions or concerns regarding your health and insurance needs, please contact me. And I see you all next week, and stay safe and take